let's move on now and talk about what's going on in global market, how central bank action is driving liquidity across the globe. We're joined by Mike Ingram. He joins us in our studios in London. He's the Chief Market Strategist at WH Ireland. Mike, thank you so much for joining us on Bloomberg Quint. I was asking you what your view on flows into emerging markets like India. Are we still, attracting the attention of global investors?
Yes, very much so. If you look at the most recent asset manager surveys, you're seeing continued flows into emerging markets. You're seeing a very large proportion of new equity mandates certainly being based in and around global emerging markets. More of a pivot, I think, towards Asia and Asia, including Japan. But they're getting certainly more than their fair share of flows at the moment. And you'd have to say that they are being rewarded with performance. We've seen significant outperformance from most emerging markets versus their developed market peers this year. There is still a valuation argument there, and as I think you alluded to in your preamble, certainly the monetary policy environment globally still remains broadly supportive of taking on further risk.
So let's get to that monetary policy. We got to see the Bank of England make an announcement later this week. What are you factoring in, and what are you expecting the Fed to do?
Okay, so Bank of England, certainly tomorrow the market would be very surprised if the Bank of England were not to hike rates by 0.25%. Putting that into context, that's just taking back the rate cuts which they put in place August last year post the UK referendum. I think the key there will be whether or not it's a one and done situation. Certainly the market at the moment is factoring in fully another quarter point hike during 2018, and probably the best part of a further hike in 2019. And 2019, of course, would be post-Brexit for the UK. So, most people haven't been positioned for aggressively short sterling. As I say, a hike is discounted in the market. If that weren't to happen, I think we'd see sterling fall. It really depends on what kind of guidance we get further out on a sort of, on a 2 to 3 year basis as to whether or not we actually see sterling rally from here. Fed, well, it's interesting, isn't it? Because again, if you look at overnight interest swaps markets, this is a dead FOMC markets ascribing only a 10 to 15% probability of any kind of action from the Fed this time round. But having said that, an 80 to 85% probability that they will once again pull that trigger on a rate hike in December, and actually for the first time, certainly post-crisis, actually backing up that dot plot of 3 hikes during the course of 2017. I think events will overtake us, however, going into 2018, of course, because within the next 24 hours, 36 hours or so, we're expecting an announcement from Donald Trump on who Janet Yellen's successor may be as chairperson of the Fed. It may even be Yellen herself, though the smart money seems to be on Jerome Powell, which would still ensure essential continuity on monetary policy. But, there are so many vacant seats now, and in the Fed, and this is a president which doesn't really have an ideological bone in his body. So, it's very difficult to gauge what the Fed's reaction function might be going into 2018 and beyond. So for instance, there is talk about Jerome Powell gaining the chair, but the vice chair would be John Taylor, and John Taylor, as we know, was the author of the Taylor Rule, and the Taylor Rule at the moment suggests that the Fed funds rate should be somewhere north of 3%. So, as I said, it'd be very difficult to actually gauge what kind of Fed we're going to be dealing with next year. Certainly the market doesn't believe that the 3 hikes implicit in the current dot plot is going to materialize. You would have discounted probably 1 hike at this particular point in time. It's perhaps one of the reasons why the dollar hasn't performed this year. It's down 7% on a dollar index, and of course, at the moment we are in a bit of a sweet spot. We've got accelerating economic growth that's been reflected in emerging markets, with certainly a broadening out of that growth. You've seen key emerging markets like Brazil and Russia exit recession, and all this has certainly been underpinned by a weak dollar. What if you suddenly got a new hawkish Fed? Seems unlikely at the moment, but you can't discount the possibility that could be disruptive to the very positive performance that we've seen in emerging markets year to date.
Mike, I was just going to ask you that if you get Taylor somewhere in the mix, will that throw the markets into a bit of a tizzy? I mean, Taylor will have to do a lot to explain why the Taylor rule doesn't apply right now in this economy. And until he does that, if he's there somewhere in the Fed, the markets may be a bit nervous.
Yeah, I mean, let's take for argument's sake that John Taylor is in the Fed alongside Jerome Powell as chair. I mean, it would signal immediate hawkish dissent. I mean, since formulating the Taylor rule, John Taylor has been quite vocal, saying that monetary policy has been too loose at the Fed, as indeed has been the message from Kevin Walsh, who's another contender for Fed chair, if not a seat on the board. So we've talked about doves and hawks on the Fed, but generally speaking, we've had a very, very dovish FOMC, and the 2017 vintage is one of the most dovish of all. Of course, we do have on the rotation of the regional presidents, we have got characters such as Esther George, a known hawk coming back on board as a voter in 2018. So we're going to have that to contend with. But just looking at the mathematics here, the number of vacant seats. Donald Trump, via his selection, could pretty much make up the board as he sees fit. And as somebody who doesn't seem to be ideologically driven, I mean, we know that candidate Trump was very critical of the Fed. We know that candidate Trump said, the Federal Reserve is conspiring with the Democrats to keep interest rates artificially low. But President Trump says, well, I'm a low rates guy. So how do you reconcile that statement with his own previous statements, or indeed with the fact that he's looking at John Taylor, a known hawkish quantity, or Jerome Powell, who's probably not going to be any more hawkish, at least not substantively, than Janet Yellen, who's an uber dove. It's as I said, it is going to make the Fed, I think, a lot less predictable going into next year. And of course, it comes at a key point when they're still adhering to, at the moment, a 3-3-3 dot plot. They're likely to deliver on that 3 in 2017, but we're not seeing the inflation numbers come up, and you've got different personalities involved from 2018 forward.
Okay, Mike, you also alluded to the dollar. We've seen the dollar weaken against the yen and a bunch of Asian currencies. Where do you see the dollar heading from these levels, and what's going to define the trajectory of the dollar here on?
Well, certainly interest rate differentials should be supportive of the dollar going forward, and for the immediate term, of course, you've got the prospect of tax reform, specifically corporate tax reform, and a concessionary rate on repatriated profits from US corporates. So you might well have a front loading of dollar performance. On the back of that, we are seeing passage through Congress of that bill, and in terms of market activity, well, we have seen the dollar stage something of a recovery over recent weeks. We're no longer in that sub 92 level on the dollar index. We're at 94 and change. Of course, we started the year 100 plus, so there's certainly scope for a dollar recovery. But my worry overall is that we were still in an environment where forward guidance, dare I say it, it's got a bad name I think here in the UK, but it still counts for something I think in the US, and I think because of the compositional effect of the Federal Reserve going to 2018, we might be getting some very mixed messages, and I think that could incur a risk premium in markets, and that itself might also contribute to further dollar strength.
Mike Ingram, we'll leave it there. Many thanks indeed for joining us. Mike Ingram joining us from our studios in London, talking about the next Fed chair and where the dollar is headed.